Councilmember Ruiz.
Here, Vice Mayor.
Vice Mayor. That's it. Welcome to the committee. And Chair Conlon.
Here.
And Vice Chair is going to be running late. Mr. Anthoven.
Here.
Mr. Massey.
Here.
And Mr. Polito.
Here.
Are there any public comments, any public members that wish to speak? Hearing none, we should go on with the approval of the minutes. If we all had a chance to look at those, then any questions or comments that you want to have before we try to approve them? I guess we've got this curing of the Brown Act violation taken care of here. Are you satisfied with this, George?
Apparently he is.
Mr.
So satisfied we left.
Okay, Mr. Conlon. Yeah.
Good to be happy.
Why do we approve it?
Yeah, second.
All in favor, say aye.
Aye.
Motion passed.
All right.
So the next item on the agenda is the discussion of this year's audit by Auditor Wong. So we'll turn it over to you, Mark.
Okay, so we have completed our interim audit, and we are coming back for the final audit on October 14th for a week and a half. So, and as a result of the interim audit, we have a few potential issues and comments that we've communicated with finance, and I'll just quickly go through what the issues are. So the objective of our discussion here of the bringing up the issue so that so the finance department will be able to cure or address the issue. And I believe Robert has already has responses ready. So, and throughout the audit, just give it a background. Throughout the audit, usually when we find out any issue, we already discuss with finance, with Robert a few times. So by now, we probably have talked about it probably at least 3 times. Mm-hmm. So that way, we kind of do not like to blindside finance with any recommendations, because this is so that sometimes through the discussion there may be mitigating controls that are present that to mitigate any potential control weakness that we identify. So, okay. So first thing is about investment policy. The investment policy says that LAIF investment should not exceed 50% of the portfolio. So we look at December 2012 and January 2013. The investment portfolio. 2012, the LAIF represented 54%. And in January, the LAIF represented 53%. So basically, your investment is not in compliance with the investment policy.
Can I ask a question? Was that because we kept reinvesting earnings, or just adding more to it? Because I know that, when we originally made the investments, it certainly wasn't 53, 54%.
No, it's 2 factors. One is that's at the time when our property tax came in, and we put them in late in the meantime before we can do other investments in other portfolios. But and when we researched that, there was 2 items that weren't included that kind of made it seem more inflated, so like 52%. Money market and our checking weren't part of our treasury report that we get from Cutwater Investments. So we believe that if we add those 2 amounts, that we're below the 50%. So that's something that we, as Mark alluded to, when they send us this memo, we get that, we respond, and that's part of our response is on the Cutwater statement that was analyzed. There was our money market was not included in there, even though we submit all the information, so it wasn't in there. So when we addressed that with Mark, we hadn't responded to him, but we're finalizing the responses. that our money market and our operating checking account weren't part of the Cutwater investment report that was pulled.
Should they be included in the investments, is that?
Well, I believe it's part of our whole operating cash, and so that's what we've taken it as, and that's something that we'll discuss with Mark on whether us taking that in consideration as for our operation. When we take all those into consideration, our lake is about 49%. So.
Does that satisfy?
Yeah, yeah. So in that case, then probably the investment report should be modified to include those incomes.
Yeah, we are.
Okay.
I mean,
Okay.
And that's the issue, because we do understand too that our investment policy, that we try to verify that we are within the parameters. Because too, I mean, and that's something too we probably will bring back as our investment policy is, like Mark suggested, probably increasing our percentage for LAIF, putting in LAIF. Keeping that 50%. LAIF is of our investments right now, our portfolio. LAIF is pretty much the most liquid and probably the most less risky, because it's easy for us to put money in there, it's easy for us to withdraw money if we need it. So we're going to, based on their recommendation, is probably bring that back, our investment policy, and increase that investment to more than 50%, because that in a sense it hinders us, because when we're at 48, 49%, we're like, okay, as we get more and more reserves, more money, we're hampered with making sure to find other instruments for investments.
And what are the other alternatives?
We can do CDs, commercial paper. We can do we can invest in government securities, and that's what we're trying to do, is be more diversified in that. But LAIF gives us is an avenue, a medium for us to take money from our operating account, put it in LAIF to earn an interest, while we find other ways to invest our money.
Is LAIF lower generally than the others?
LAIF is, yes.
Robert, maybe you could just explain what the acronym LAIF
Oh.
is, just for, any of the new
Oh,
members
yes,
who may
sorry.
not
I
understand.
think she said.
Yeah.
LAIF,
I printed out the investment policy, but I didn't memorize it.
Yeah,
I'm not
the
familiar.
LAIF, yeah, I mean, it's an acronym
it's
for,
acronym for Local Agency Investment Fund.
and who all is a part of that?
Well, a lot of municipalities, government agencies invest in LAIF, and it's the Treasury for state of California is one that oversees
Okay.
that.
And so when the Lehman debacle hit back in '08, we got caught up in that. We lost a lot of money.
Why is that? Was the county managing it?
Because we were in
A pool.
it was a pooled, yeah, it's a
A
pooled
pooled
investment.
investment.
So,
But it's the safest, but I think with the whole Lehman Brothers, every government agency was exposed, because we weren't the only ones that were invested. We probably had the less exposures, because we didn't invest our pool wasn't heavily invested.
so that's why we made that
But it was-
requirement of it only being, no more than 50%. And the other government agency pool is called, there's another one that we don't invest in anymore. Can you remember? Can you think of that one?
No,
I can't.
I
think
know
of
that
it.
we, in our investment policy, it was set up to be, to help us to avoid risky investments. So like the highest that we can invest in is right now, 50% is LAIF. Everything else, I think, is 30% what we can do. And so we have a trustee, our trustee is Wells Fargo. We have our investment advisor is Cutwater Asset Management, which helps us in investing. And part of our investment portfolio, when they give us recommendations of where to invest, and they have our investment policy, so they can follow and understand what we can be invested in. And what they do is they take, before they invest, they communicate with us what they have. And then they go, and if we say it's okay, they go and they do a 3-bid process, where they go with 3 different banks and they bid that investment, whether if it's commercial paper, whether if it's government securities, and of that we do the lowest of the bid, that's part of the investment policy.
With LEAF, do the government managers take 20% of the return off the top, or
No,
what? How do they get paid?
LAIF, I'm not sure how that completely works. I know that LAIF is just an investment pool that is more, it's more for liquidity and easy for government agencies to put money and earn a bigger interest rate. Before the stock market in 2008, LAIF's interest rate was about 5%, 6%. It was very high. So what government agencies were doing was, instead of having to deal with the market and having to always keep track, or having market managers keep track of it, since the interest rate was so high, government agencies were putting their money in LAIF. Well, once 2008 happened, the interest rate went from 5 to like 0. So agencies were looking for other avenues to invest. Personally, LAIF, I think it's safe. The biggest part of LAIF also is, if we ever need money, we can just call them, wire us our money. We have it's pooled, but we have our own set account, basically. And, you know, right now I think we have about 10 million in LAIF. So whenever we need money, instead of having to go and try to sell government security or any of those other avenues or investments, we just get our money from LAIF. And it gets wired to our operating account. So
when you said 50%, are you talking about just the general fund or across all the funds for this town?
It's across, what we use is across all funds according to the investment report that was submitted to the council. So yeah.
So the library money and capital improvement, all those funds are in there, and then
it's
no more than 50% of the total.
correct. It's everything that was reported in the investment report.
So that one, I think, either one, we're below, I believe we're below the investment portfolio percentage, but two, with the recommendation with Mays and Associates, we also are in the agreement that maybe trying to bring increase that percentage, not maybe a couple.
As a matter of policy?
Mhm. We'll bring that back with our investment policy.
Why would you tie up money that's not going to be used for a long time, like library money, in something yielding basis points instead of percent?
Well, it's all pooled. Every fund has its own, we don't have like separate actual physical bank accounts for each fund. So it's all pooled into the general operating, but it's accounted for in the fund basis. So,
Well, but Bob's saying if you know you're not gonna use those funds for several years, you could invest in it longer term.
we could,
Investments.
right, and we
Whereas
do.
the short stuff, you need to keep short.
Mhm.
And, I don't know how much that is, what's 6 million, the library, 7 million?
It's about 6.
7,
Oh, it's about 7.
close to 7 right now, yeah.
So you
I
could
suppose
put
it's
that
a trade-off with safety if you went to longer-term securities, and then the inevitable consequences of the Federal Reserve's flooding
Of the interest.
the market with money, and then interest rates start going up, and then the value of those assets
Go
goes
down,
down.
right. It's
I was
a chess
suggesting
match.
30-year paper at this point in
Yeah.
time. Not just suggesting
5 years or something.
that, yeah.
5-year ladder or something like that, so you'd have every year, you'd have an opportunity to turn it if the rates went up.
And what is what's the rate for a 5-year?
Well, 10-year bond today is 2%,
Yeah,
so I assume 5 years.
Yeah, go all the way to 2.5.
We do have some bonds.
We do.
We are invested in.
And the
bonds.
most we can invest, the long term is 5 years. That's our cap.
Yeah, we
So
did
we-
not want to invest long-term bonds.
Yeah, and we make sure when we do that, we verify if something is callable, usually it's within a year and a half, so we're like, okay, we can handle that.
yeah.
You know, so we don't wanna go out to, when we do investments for 5 years, usually everything, by the time it's callable, within a year and a half, it does get called, so we get that money back plus interest. So, it's one of those where we don't try to stay out 5 years.
But your point was merely that we had too much in life, is that right, Mark?
According to the investment
Yes,
policy.
he doesn't care how much it is.
Yeah,
as long as
exactly.
it matches the
Ex-
policy.
exactly.
You're not into the.
He's
well,
verifying
I don't think we
the
should
policy.
go into the investment policy now, just
Right.
in the interest of time, because we have some other stuff that's
Right.
equally important. Do you have other points?
Yes, okay, just quickly, I'll just go through it.
Yeah.
Because of the transition of finance director last year, so there was a September 2012 bank reconciliation that wasn't signed off and approved. So, and I think subsequently,
It's been, yeah,
Yeah,
it's been
done.
reviewed,
Okay.
signed off, and.
Or is it the year end or some individual?
No, the monthly bank. recs.
monthly bank record, monthly
Right.
bank
Or is it
reconciliation.
1 month not reconciled?
Oh, it was, it
Right.
just wasn't signed off by, there's a person that reconciles it and one person that signs off. And there was a transition period between before I got here and the previous finance director. The reconciliation was done and completed, but there was no sign off that it was verified.
But
That
there
was being reviewed.
There was nothing in the reconciliation that was unusual that you were concerned with?
No, yeah. So, yeah. And then this other one, the next item is about a purchase order. So it also happened during the transition period. There was a disbursement of 1,530. It's not a big amount, but I think the town's purchasing policy says that it requires a PO, a purchase order. So that item did not have a PO, but I think
Yeah, we've addressed
Yeah, so
that.
we addressed that,
With POs, every invoice has a PO. At that time, it was just one invoice of their audit that they pulled and it didn't have a PO. So that's something that,
Was it just general authorization? or-
yeah, just a purchaser, that's our policy, a purchaser, anything with 1,000 or more. And this was only an invoice for 1,500, and when they pulled it and verified, and audited it, it didn't have a PO with it.
So it was probably authorized?
But it was authorized, it
it
was.
was
There
authorized,
just
but
no PO.
there was no PO, so.
So do you have a procedure where you don't pay the bill until the person paying the bill finds the PO?
Well, we do, we have a procedure that POs are required and we verify, our finance department verifies. We're the ones that issue the PO once the requisition is signed off on. It was just a matter when there was low staff, staff was a turnover between all different departments. And so it was approved, but the PO wasn't put with it. So that was.
Yeah,
You wouldn't
and-
sign the check without a PO?
Well, this is before we got here.
It was like mid-year
Yeah.
last year.
Yeah.
This is a previous.
When Deborah Walker was leaving, she was only working part-time as our finance director. And really kind of before Robert even got in and got going, she kind of stopped coming. And this was before George didn't come until mid-October. And so there was, last year.
Yeah, and Teresa was very
I'm surprised you only found that.
Well, we picked 40, so we found one, yeah.
Yeah, the 40, we're pretty good.
A sample of 40,
That's pretty good.
Yeah.
You know,
Yeah.
there was a little bit of chaos last summer.
Yeah. Okay, next item.
Terry wasn't even on council then, you know, so.
Missed it.
We used to have a lot.
Okay, next item, the finance director, Robert, has a super user status for the general ledger. And this is because, there is, finance has insufficient staff. You have 3 staff, including yourself. But however, because we are the auditors, right? So we come in. So usually management should not have access to be able to make adjustments in the general ledger. So because usually there's high risk that management has management can override internal control. So that's always a risk. So we always like to see that management do not have access to go into general ledger to make adjustments without being detected timely. So what we suggest that it's the super user. I know for the finance director is usually the in a limited staff environment. Usually the finance director is the system administrator. So what we suggest is that if the finance director stays at a system administrator, there should be another person to be able to review what changes he made. So,
Who would that be?
so in this case, I think would be,
We decided, yeah, as Teresa,
Teresa,
exactly.
yeah, sorry.
She would be the super user, meaning she
Oh, so
would
you-
have the
okay.
main, the all access password to make changes, to add people. I'd be the administrator, I can add people to a certain extent. And all it is a system of control, one that has the code, shouldn't have the keys. So it's one of those things. So, and we're gonna implement that. But in the meantime, we've always had a system of control. We had an audit report that we print out, and it shows monthly, it shows what transactions, what changes have been made. So we print that every month, and we sign it, we keep it on file, so you can verify those that have access, what changes have been made. So, but
And that report is such that you can tell if something's missing, in other words, it's something missing number.
and you can tell like who did what, like who.
These are all journal entries?
The journal entries, it could be change in the pay rate through payroll module. So we print that, we have that, and we've been following that. This is just an added measure, so it's not like we've been without any controls. And so we decided that for that, and because we're such a small agency, that, having like someone like Teresa have the access, be a super user in the financial system would help us keep that control.
So is this an add-on for prior procedure?
I think prior we have sort of commented on it before, maybe the year before, and because of limited staffing, and I think in prior to Deborah, I think when Louise Ho was here, the control was that Louise Ho said she doesn't enter any journal entries. So we sort of accept. Sometimes we come in, we look at the risk, we address the risk, and we respond. A year-end audit, we sort of maybe we test more controls, or we test more samples.
So just to put everything in perspective, kind of outline our finance department, for us, Robert. We've got you
Right?
as finance director, and then
We have our accountant, June Khan, and then we have our account clerk, Noi. And we do have the systems and controls that Mark was mentioning, like, I'm the one that can commit payroll batches, I can commit AP, but I don't enter AP checks, invoices. So I don't enter any payroll, but I oversee and I approve payroll. I don't make any journal entries, so there's control in there.
Correct.
Someone does a journal entry, I sign off on journal entries that are going to be made, I approve them. I approve the payroll batch, and then George reviews it. It's also the same thing with AP. I review it, I commit it, but I don't enter, I don't create the checks. And then, and also George reviews it, and we both are signers. So there's multiple systems of checks and balances in place. So we just make sure that I'm not the one that, like, I don't reconcile the bank and I don't approve the bank rec. So there's control there. So I'm the one that reviews the entries that others will make.
Do we really sign checks?
Yes.
Really?
And sign them, go through them every month.
No, I can imagine.
Two signers,
I never sign checks in my company, just because of what you just said. So 2 signatures on every check.
Yes. So we have the controls in place.
that seems acceptable.
Yeah, especially if Teresa becomes the super user. So
I think that's probably of all our controls, that's the
Does she have enough
last one.
knowledge to be knowledgeable?
Well, she wouldn't need to be knowledgeable on how to be like in the system. She just knows what report to print, and she has access to give us our access, our level of access. That's what we want. We want to make sure that she's a super user, that she's the one that can set up our level of access. I can still be the administrator, but I only have so much access that I can.
Is it basically that somebody else has knowledge that you're modifying a document? That's basically the protocol. So that he can't do it by himself.
Yeah.
Okay.
Sounds good.
and then last item, because it's payable detail, and I think we have discussed this in a few years, for the last few years. So basically, I think it has been cleaned up some, but I think it's not been completely, for the permits deposits, it's not been completely reconciled.
Is this from the building department or from park
The building,
uses
From
or
building.
business licenses?
it's the building deposits, like. your
Building
permits.
deposits,
Yeah,
okay, yeah.
So,
That was a hornet's nest a few years ago.
Right.
So,
and I think I think finance has cleaned it, a lot of it, but I think there's still some outstanding, so,
Still some like,
outstanding.
Yeah.
improvements that can be made. But wasn't that gonna be done through the new software system that the building department was
Yeah,
implementing?
we're working on that. We're we're doing an update to the software system. So we've already had a meeting to making sure when we update this, that it has more capabilities for us to keep better identifying deposits.
Mhm.
And so that includes working with the permit system and working with our financial system, because they talk, they interface. So, and so we're already working on making sure that the deposits, the descriptions come up, because we wanna make sure by street, by permit number, by person, so it's easier to identify. And again, we have to understand with deposits, with buildings, some of these projects can last 2 years. So you're sitting on a deposit that was given to you 2 years ago, and then when the project's finally finished, you're just making sure that this is the permit number, this is the amount, so that's the whole problem.
And some of these deposits are refundable at
Right.
the end of the,
That's
so
why.
that's, I think,
Yes.
the key. We're talking about like a recycling deposit or a encroachment deposit, something like that, right? Even after 2 years or something.
and then if not, then they go into revenues or into,
If they're not refunded,
I thought we put in a policy to sweep those after a certain period of time.
And we're working on getting to that point, through
It's been
sweeping
2
it.
years since this has been,
So,
it's
yeah.
amazing, this is still even
How much money
under
we talking?
discussion.
I think
well,
500,000.
so.
500,000?
We had a temporary,
About- About 400, 500,000.
But I think those are the old, I think the challenge here is the
Yeah.
old ones, right?
Yeah, the
Because
challenge
you-
is older ones.
Because you have a new software system that
And we did
they can
see
track the new
a
ones.
whole batch.
It's the old ones
That's
that's
how
been
we had
sitting
it
there
for
for a few years,
Yeah.
quite a few years now.
I know,
But
but
again,
are you saying the old ones are 500,000 in deposits?
It's-
You
it's-
don't know
it's-
who they belong to or
It's
what?
not the whole, it's a total, but
Yeah.
of the 500, probably, maybe half is probably the old
It's
ones.
probably been.
I think old, I can't remember exactly at this point, but
Mind-boggling.
it's like 100 and,
There was,
and it's 100.
the last year, they want the money.
We went through a whole system.
But again, too, a lot of these projects, there's projects that are 3 years in the making.
No, I understand that, because they seem to be all around my house. But, so you, some of them you can't identify where they came from and who the money belongs to.
It's not it's completely making sure that we track them, we have them in our permit system and building, and making sure that if we refunded it, if we did refund it, then we just make sure that that liability is, that's our revenue. It's just verifying that. I mean, so it's not sitting in revenue, it's sitting in the liability account as a deposit payable. So it's
Who's
just
got the
verifying.
responsibility to clean that up?
Our department and building are working on that, because it's 2 different systems.
How many items we talking about? 250 old ones?
I'd probably say maybe 150, maybe.
But
Just taking one by one. I guess.
Yeah,
yeah.
and that's what we're doing. And it's just, we want to make sure that we identify them and get those out.
What was the sweep date that I was talking about? Is it 5 years, 10 years?
I forget what the plan was, we put in from the audit committee before, but there was a significant amount of money sitting in these accounts.
And we
We
collected them.
implemented with the city attorney at that time a plan to notify everybody through public notifications, et cetera, because as somebody mentioned, you couldn't even read these names, and these people probably been either deceased or moved out of town 20 years ago, but the money was still sitting there. So we worked with the city attorney to put in a plan to to get that back, and I just was surprised to hear that we're still in that mode, because we had set up a thing to sweep some of the money, which the mayor said we did do,
We
but
collected
there's
a bunch.
still other issues, because you just can't find some of these people. At some point, you gotta say, hey, you know, that
Time's up.
$2,000 deposit from 1957, let's just put it in the general fund. I mean, you know, come on.
So I think
That
that,
was the thought process we went through.
right, and I think that on our building permit application or the deposit receipts, it said there was a new clause that was added that created a time limit. And I don't know that for sure, but do you, I mean,
I don't know, so we're certainly gonna check into that.
Yeah.
I'm looking at.
No, I actually, when I came on board,
Yeah.
there was a city attorney who unfortunately was very inexperienced and was trying to create a whole new process that was bizarre. Had to do with a sheet, like the state of California,
Right.
if they can't find somebody to give a tax refund to, then it sheets to the state. And they wanted to do something like that. And I said, this is baloney. Our own process says, if the deposit isn't used, it goes back to them. If we can't find them, it goes to us. How
Yeah.
more direct does it need to be?
It was extremely frustrating, when we put it that way.
Yeah.
We had two city attorney issues, and you just said the word bizarre. It was like, what are you thinking?
And this is back where it was Elaine,
Louise Ho.
Louise Hope,
Yeah,
I keep calling you
Louise.
Elaine. And Louise came to me and said, what do we do? I said, sweep it. I mean, you take it. I said, what's the worst that can happen? Somebody
Yeah.
comes back, 2 years from now and
Take
says,
it back.
hey, I've been sailing around the world
Yeah.
and give me back my $50,000. Well, give it back to
Well,
them.
the issue is, when do you sleep it? Is there a rule after a year or 2 years you sleep it?
Is there a standard in your industry?
There is a California government code on it, but I don't have it in front of me. I'll be happy to email to you, because I think basically I think the city has its own policy.
It's contractual.
Yeah,
We have our
exactly.
own permit. That's it. We have our own,
Yeah.
Is there a time frame on that?
Yes.
We were talking about it.
and these were all expired, and there was some question of, do we have to give them separate notice? I said, absolutely not.
Yeah.
We had an agreement, when they got their permit, it says, if you don't do this, this money becomes ours. And I said, look, there's always a risk in everything we do, that somebody's gonna show up and say, hey, I want my money. Great, then we'll cross that bridge when we come to it. In the meantime, put it where it can be used, instead of sitting out there in a fund that, ultimately, somebody will come along from the state of California and figure out a way to steal it from you.
Well,
Yeah.
Yeah,
That's not.
these old permits, when we, back in 2009, we transferred from a different financial system to a new financial system. So a lot of this is just, it's old permits that have been pulled.
Prior to 2009.
Prior to 2009.
2009.
Prior to 2009.
Yeah.
In 2009, we implemented spring.
Springbrook, yeah. So it's just, the current part isn't the issue, it's the old. yeah.
It's just a matter of setting priorities to get somebody to clean them up.
It's just us working in conjunction with the building departments, making sure that, the report that they print and the report that we have is they coincide, so. We'll make sure.
George, can you make sure that happens?
Yes.
Because it's an inner part of it.
Yeah, we'll make sure that happens. I'm interested to find out just how much we can sweep into the general fund.
Yeah,
Not like 250,000, so.
yeah.
All right, is that it, Mark?
That's it.
Anything else you want to share with us at this time?
No, I think that's it, because the rest of them are upcoming gas fees, and I talked about it before,
Are
so.
there any accounting rule changes that you anticipate during this year?
Gas fee 663 for fiscal year 13, but I think we've talked about it before. It's the format of the financial statements will change a little bit. It's not too drastic.
Having to post
Correct.
above the line.
Right,
your
so
liabilities.
there will be it's called statement of net position, and then there'll be assets. So the balance sheet will look like you have assets, different outflow, liabilities, different inflow, net position. So different inflow and different outflow, I don't think it's going to affect Atherton too much. So
It's just the
it's,
classification.
yeah, it's just classification.
Mark, how do capital expenditures that are funded through general revenues reflected in the financial statements? Is that a separate fund, or is that in the general fund, or what?
So basically there will be, for capital expenditures, you will see in two areas. So for governmental funds, in general fund, so general fund is treated as modified accrual. When you spend expenditures, it's, you would, I'm gonna talk debit credit. So you would recognize it as a capital outlay expenditure. So basically capital expenditures, or sometimes it's recognized as a department expenditures. So it could be, let's say, public works expenditures. So it's actually expenditures account on the income statement, and then in the entity-wide statement, it's converted to full accrual. So you will back out the capital expenditures and put in the capital assets.
But general fund's different. General fund, you
Yes.
don't accrue, you don't, your capital isn't on the balance sheet. It's on the financial statements to show the government-wide it is, but in the general fund, it's not. It's not only enterprise funds, they're capitalized.
Correct. Only enterprise funds and internal service funds.
Yeah.
And the idea behind it is because general fund is measured on a available basis. So it's because it's a general fund, anything that has long-term asset, capital assets and long-term liabilities are typically not booked on the general fund. So if you see any bonds, they are not booked on the fund level.
But if we fund them out of our parcel tax, we would just show it as an expenditure in the general fund and.
Correct.
Because in the budget process, we're discussing whether that should be before or after our so-called deficit or revenue, net revenue. And I just wonder what other entities do. Do they put it above the line or below the line?
It has to be above the line. So the capital expenditures typically is above the line.
Well, if it's an
Different
expenditure,
lines.
yeah.
Different lines?
We're talking different
Are you
lines.
talking different lines? Okay.
I'm
looking at the financial statements.
We'll get our lines straight.
Yeah.
The good news
Yeah.
is we've already done our budget.
Oh, okay.
Approved our
Okay.
budget for 2015, 2014, so.
Yeah, because
That's good.
because the line